Hi traders, and welcome to the Technical Analysis Market Wrap on Friday the 8th of January 2021. So happy New Year to everybody. I hope everyone had a great celebration over Christmas and New Year and have started the year off on a good note on a trading front. So we'll jump straight into the charts and we'll have a look at some of the positions that we were talking about later, at the later part of last year. I've marked all of the charts today with a vertical red line marking the last Friday wrap, just so we can talk about what's happened since then and any potential trading opportunities from today onwards. So we'll start out here with the Aussie USD. On a daily chart, you can see here, this is the 18th of the 12th where the vertical line is. We had a pullback basically not long after that, the week after. You can see it pulled back to the 20 moving average, which is the move that we always like, and it did pretty much rocket off there from that point, and it reached a high of just above the 78 cents, which it did look like it really wanted that. We have to go out a very long way to actually see that play out in a resistance standpoint. You can see here, even on a weekly, you can only just see it, but if you go to a monthly, it actually makes a little bit more sense. You can see here that the resistance was very, very strong here for a very long time, many months. Okay, and you can see back here. So this is obviously a very, very important zone for it. That's a very, very long time frame, but it just really highlights how far you have to go back to see how important that zone is. It's been a long time since it's been there. So we're probably expecting, a little bit of weakness from this point onwards. I wouldn't be anticipating a break any higher until we probably get a pullback that makes a little bit more sense from here. So you need to go to the smaller time frames to try and isolate that trade. What we'll be looking for here, you can see here, even on the 4 hour, the trading opportunities, even if you missed that initial move, have been pretty good. You can see that it launched off the 20 moving average and the 50 moving average at this point here and continued on, and it did the same thing here. So if you had your stop losses in the right place on those ones, they were all really, really good trades. But now we're probably looking for a little bit of weakness. I think that the 78 is going to probably hold it up. So we're looking for maybe a series of lower highs and lower lows on a 4 hour or even maybe a 1 hour time frame. You can see that it's trying to here on the 1 hour. You can see actually what was a really good double top pattern right at the resistance that we're talking about. You can see here the double top came back to the neckline. Let me draw it up for you so you can see exactly what I'm talking about. Okay, that is the double top, and then it came back and is effectively retesting the neckline as we speak. So potentially an entry point from this point onwards, but what we want to see now is definitely that lower high and lower low sequence on the peaks and troughs, and that would convince us that it's going to have that pullback that we're looking for. What we're looking for from in the first instance is probably back to this level here. This is the first real test of the early resistance, and that'll be the 20 moving average as well. So we're looking for a 20 moving average pullback on the daily, and you're going to find that by the time it gets up there, probably around that sort of 76.50 area, that would be a really nice pullback zone. It coincides with some role reversal, so that's what we'd be aiming for there. But we need the confirmation on the 1 hour that we're definitely in a downtrend. A break of the 77.20 would tell us that, and then we'd be looking for that weakness to the 20 moving average. All right, we'll move on to the US dollar CAD. Same deal here, really. We saw that it actually, that's the line we were talking about at the last technical analysis wrap, went up, pushed past the 20 moving average. If you took the trade straight off it, you still would be safe because your stop loss is definitely going to be behind the 50 at the very least, so you would have been able to get involved in that trade. It didn't really push much past the previous low. And that's really the target I would have been going for anyway, because we know that this level is obviously very strong. We saw that last time when we blew it right out. I'll take it out really quickly just so you can see what I'm talking about. Again, you can see that very strong resistance here and right through here, and it was support there. So it's no surprises that it's going to be support or very strong support again. It's going to be a hard to get through. So if you were shorting from this area here, I definitely would have been looking at taking profit at the support. Even though it went down a little bit lower, it struggled to get past that level. Now we are getting some MACD divergence now on a daily chart. So depending on what it does in the first instance, like it needs to break through past these moving averages to convince me that it's going long. And I'm not willing to put any bets on this is going to go very long until we actually get a series of higher highs and higher lows on a very significant time frame. That certainly hasn't happened yet, so still got a fair bit of work to do. But yeah, I would expect that it would probably at the very least get up and touch the 20 moving average on the daily, which is around that sort of 127.70 area. and that's not a bad zone to go from. So you go to the smaller time frames and look for a series of higher highs and higher lows, a break above the this level here. You can see we've already got the sequence starting, but we want to see that high now. We want to see it break above these moving averages, and if we get that, it'll probably more than likely push up to the 200 on the 4-hour chart, which would be fine. That's around that sort of 128.43, so it's a little bit further than the 20 moving average on the daily, but it makes sense from the standpoint of the 4 hours. So I'd be probably aiming for that, but you want to see the evidence first that it is going to push up. Now, we do have to be mindful that we've just had the runoff elections basically concluded with all of the turmoil that was going on there. So a little bit, that's impacting the markets a little bit, no doubt. So probably in the coming days, we're going to start to see that settle down, and the market will come to terms with the Democrats basically taking over everything in terms of what the market's going to do. So we'll see a little bit of settling in the markets, and that could definitely see these major pairs gravitating to these key zones. And I think the key zone for this one now will be up around that sort of 128.50 area, which is around that 200 on the 4 hour. So look out for the break up here, and not a bad one-to-one trade. All right, we'll go on to the all-important dollar index. Now, we can see here that this is the, again, vertical line that we were talking about. It also did the same thing. It basically pushed up, touched the 20 moving average. If you were doing our normal trading strategy that we've been doing for a long time now, you would have been quite happy with this one. It pushed right down again, and it did go past the previous low, which is pretty good, a little bit more than the CAD did, but it's getting into that area where we know it's going to find very, very strong support. Okay, I'm not going to take it out to the monthly. We know this already. So we know we've got very, very strong support around this level. It's going to take some serious breaking, and it's going to take a very big momentum shift. If the election turmoil didn't do it, I'm not so sure anything short of really, really big important news that we're not expecting is going to force this down. So the dollar strength is probably going to stabilize around this level. You can see we've had a very big rejection candle there. We've got a big rejection doji, and now we've got a pretty strong daily candle pushing up. This is the daily chart. So it's up pretty close to the 20 moving average. My only issue with this one is that it's very close to the 20 moving average already. So there's not a lot of room there to be actually trading this one with a lot of open air in front of us. We've got resistance pretty much straight in front of us. Still not convinced it's going much shorter, but I think it could hover in this range a little bit more. So what we're looking for the dollar index is to prove to us that it is finding its base here, and it's going to start gravitating longer. But in order to do that, we need a series of higher highs and higher lows on a big time frame, on a meaningful time frame, to get it past this level, break it above the 20 moving average. Hasn't done that in quite a while, as you can see. And if it does that for us, then we can start looking to the areas that we'd be looking for here are probably back to that 90 and 92 area. In the first instance, we'd be looking for that sort of 92 area. That would be our first point of call. It was very strong support there, and that's going to be the first part of very serious resistance for us. But it's got a long way to go and a lot of work to do before it gets past that area there. All right, we'll move on to the EURUSD, another one of the favorites. This one's an interesting one because, we can see that the vertical line here was already at that sort of 122, sort of 70 area when we did our last Friday wrap. So, no real surprise. It hasn't done anything really, really exciting. It's come back a little bit and pushed up higher, but it's only really ended up around the same place. Like, it's gone up a little bit higher than we were previously talking, about 40 or 50 pips higher, but nothing really to write home about. If you go to the smaller time frames, you can see how sideways it's really been. This is a 4-hour chart. That's the date in question, and you can see here that it's been pretty sideways, really. So, and that's probably telling us that it's finding the top of the range now, and that would coincide with a little bit of a pullback on this one, especially if the dollar index is starting to show a little bit more strength. So we're probably looking for weakness more than anything else on the euro at the moment. We'll go to a 1-hour chart. Very, very messy trading, as you can see. What we want to see is a clear-cut break and a series of lower highs and lower lows, probably at least on the 1-hour time frame. It's fairly choppy, so I'd be looking for that to take a decent position down to the previous area here, which is the 120 area. That's going to be the real key zone for this one. If it comes back down to this level, it seems like it's a long way away, but any form of weakness, I mean, if the dollar index gets to the 92, very, very highly likely that this one's going to be back down at around that 120. So both of them will work in sync if it's going to happen. So you can keep an eye on both and trade the one that looks the most clear here from a technical standpoint. But we'll certainly keep an eye on this one. If you want to scalp this one, you've got to go to the smaller time frames again. But even that, like you look at a 15-minute chart here, which is as low as I pretty much like to go, and even that looks choppy. I see no opportunity, long or short. And yeah, I wouldn't be inclined to take this one until we get a clear break on a reasonable time frame like the 1 hour or the 4 hour. All right, we'll move on to the US dollar yen. This is another one of the favorites. You can see here that it's been respecting the 20 moving average for a long time now, so there's no surprises here. You can see again our line in question. It came up, tested the 20, and yeah, lo and behold, down she came. Basically replicating what a lot of the other majors have done. So hopefully people, if you were trading over the holiday period, you should have been able to get involved in that one, and it proved to be a pretty good trade as well. So we know this is a very strong support for it. Again, I wouldn't be shorting when you know that you're approaching strong support. If you are shorting off a very key moving average like the 20 moving average is, you don't want to be aiming for the stars and really going for big long moves. The first or the lowest point since the touch is generally the area that you'd be going for. Only 1-to-1 trades, but you know what, they're still pretty reasonable pips on the daily time frame. So it's had a little bit of a reversal now. It's pushing up past the 20, so it'll be interesting to keep an eye on this one, watch what it does and see if it can maintain its stance above the 20 moving average. It hasn't been able to in the past for quite some time now, but again, we're looking at potential US dollar strength. So if we get that, this is going to help the US dollar yen, no question. So we'll keep an eye on this one. Go to the smaller time frames to look for the patterns. Okay, we want to see a series of lower highs and lower lows on a 4 hour at least. When you're at a key support zone like this, we want to see a reasonable time frame where we're going to get a good change of trend. If we get that, we've got plenty of room to move up to the next support zones. They're everywhere really. The 105s and the 104s, every round number is going to provide resistance, but it also gives us really, really good points of or basically take profit zones to aim for. So that's what we're really looking for, and we're getting plenty of those. So keep an eye on that one as well. Let's have a look at the US 500. This has been a very difficult one to trade, even though it looks from a technical standpoint, it's pulled to the 20 moving average a few times now, and you could have traded off it. But again, if you're not trading the news and there's a lot of political stuff going on at the moment, it does make it a little bit hard to trade this one, especially when it is at all-time highs as it is. Probably waiting for this one to settle down a little bit. As you can see, it's pushing to absolute new highs again. It's a difficult one to get involved in from a technical standpoint, even though the technicals are holding up. But I think that's more because the market's starting to really grind up more than anything else, and the moving averages are catching up. So I'm not inclined to probably long this one, more inclined to probably look for resistance and look for an opportunity to short it, go to the smaller time frames, look for a series of lower highs and lower lows. But even on the smaller time frames, as you can see, it's been fairly choppy trading. You could have got it involved in maybe a 1 hour trade, but again, you are trading news in that front, so it takes away a little bit from the technical. So probably more a watch and see on this one until we get a very clear direction as to where it's going to go. But yeah, at around the 3,800, it does prove very difficult to long, especially now that the market's starting to settle and basically consume all of the news and the events that have happened this week. All right. The last one that we're going to have a look at today is gold. We'll have a look at the US dollar gold. Again, this is our line. This was the perfect trade. In my opinion, we knew that we've already had the series of higher highs and higher lows already at the date that we cut off, which obviously makes us happy. We know that we love this, and it did the exact thing that we would want it to do. It came back, touched the 20 moving average, which is a perfect combination of the higher low test. 20 moving average, off she went, and I know a lot of people, I got a lot of emails, a lot of people did go long on gold, and they managed to get this one, so well done to everybody there. And now we've even got the moving average cross to help us, but that was already a foregone conclusion once we had that big move up anyway. But the 20 moving average touch was the perfect entry point. Hopefully you were able to get involved in that. This is one of those ones now where it's probably going to be a little bit sideways as well until the market settles a little bit. Again, takes in all the news. I think that we're in for a really good trading environment ahead. I think we're going to have a really good year of trends. We've got the good breakouts that we've been looking for, and now we'll get that consolidation that we're probably needing. The market needs to probably just take everything in, and then it will return to really strong technicals again, because once the technicals are in play, and that's what the market's relying on, we're able to really trade the signals. So I hope everybody's had a great week trading. If you have been trading, if you're only about to start, it's a really good time to start trading. The technicals are pretty much setting up for some really good moves. We're at really good points of resistance and support on all the key pairs that we looked at today and quite a few others. So we'll start exploring a few new ones next week, but we'll keep an eye on these ones. You can scalp the areas that we talked about. I think on the smaller time frames they make a bit more sense until we get some clear direction, which should happen or should start to happen next week. Have a great weekend, everyone, and I'll see you all next week.